So when you look at the key financials too, we also decided to focus on the interest income and then the operating expenses, profit after tax, net assets, and then the shareholders' funds. So we looked at these metrics from 2018 to 2021, and then from 2022 and beyond, they were all forecasted. So to return on equity and profit after tax, you can see that Cowbank has actually been making profits from 2018 to 2021, as well as Cowbank also has a good return on equity, and then the cost to income, which actually has an inverse relationship with the profit of the business. And then Cowbank has actually been performing well when you look at the cost to income for 2021, which is 43.70%. And Cowbank also has a good return on assets at 2.20%. And also Cowbank has a good net interest margin at 50.10%. So focusing on the dividend yield and then the earning per share as compared to peers, you can see that Cowbank has actually been doing well when it comes to dividend yield. We have about 16.60% for dividend yield as compared to other banks in the industry. And then for earnings per share as compared to other banks too, Cowbank has been performing okay at an earning per share of 0.33, which is 32 pesos. And then for dividend payout ratio and then the PE ratio, Cowbank has also been performing well. For dividend payout ratio, Cowbank performed more than the average industry standard.
Yes, so this is our investment cases for the financials. Looking at earning per share, with a share price of 65 pesos, producing earning per share of 33 pesos, we consider this as an ideal. Looking at their assets and liabilities from 2018 to date, Cowbank's assets and liabilities has been grown. Cowbank's asset has been grown more than that of the growth of its liabilities. Looking at their cost to income, as it was demonstrated earlier, we saw Cowbank recording a cost to income of 43.7% as of year in 2021. If you also look at dividend records, Cowbank from 2019 has been consistent in the payment of dividend. In 2019, we saw a dividend of 0.048 per share. 2019, we saw 0.089 per share. And then 2021, we saw 0.11 per share. With our valuation, we employed about 3 models in valuing Cowbank. First of all, use the market multiple approach, relative multiple approach, and also the dividend rate model. So the market multiple approach gave us a share price, the fair value of 0.99 per share, which represented 52% upside potential from the current share price. And the dividend valuation model also gave us a share price of 1.02 Ghana cedis, as well as the relative multiple gave us a share price of 85 pesos. Now, the justification of this is that if you check Cowbank's books, you see that their shareholders' fund is around 1.3 billion Ghana cedis, but then market capitalization is currently around 407 million Ghana cedis. We did this using an assumed PE target multiple of 3.0, which is in line with the current PS average, and we arrived at a share price 0.99 Ghana cedis, which is 52% from the current share price. Now, risk liquidity analysis. Now, for risk and liquidity, we are looking at both accounting and stock liquidity. So for accounting liquidity, we are looking at the rate at which Cowbank's current asset covers its current liabilities, and for stock liquidity, we are looking at investors of Cowbank, the ease at which they can convert their investments to cash. So for stock liquidity, we use the industry traded volume average, which is around 250,000, shares traded on a year to date. And then for accounting liquidity, we use the industry average and current cash and then quick ratios. So for stock liquidity, we realize that from 2018 to date, Cowbank has been the second most traded stock on the Ghana Stock Exchange and the most traded stock in the finance sector. For instance, year to date, our bank has traded a total of 16 million shares, and this is second in the market, second to MTN actually. If you look at their liquidity ratios, current ratio, our bank's current ratio for 2021 stood at 0.90 times, and this is considered as ideal enough. Cash ratio also stood at 0.88 times, and we consider this to as ideal enough. With risk outlook, bank's dominant risk basically included credit risk, operational risk, and market risk. Our bank has a special risk management committee, and the result of their work is a non-performing loan ratio of 6.5%, and this is the best in the banking industry. Now, looking at regulation and economy and general investment atmosphere, we have the dividend payment condition number 2, which states that for a bank to pay dividend, it should be able to meet a capital adequacy ratio of 30%, capital reserve ratio of 10%, and a non-performing ratio below the industry average. Now, Cow Bank currently has a capital adequacy ratio of 16.3%, which is above the regulatory requirement of 30%, and non-performing loan of 6.5%, and this is the lowest among all the banks we have in Ghana. Now, for policy and debt restructuring, Bank of Ghana during its last MPC meeting raised policy rate by 250 basis points to 27%, and this has caused lending rate to rise to its all-time high for the past 27 years. For debt restructuring, of course, because banks in Ghana actually invest part of their deposit in government securities, they are definitely going to be affected with the restructuring proceedings. Now, looking at their share price trend over time from 2018 to date, Cow Bank has recorded an all-time high of 192 pesos and all-time low of 0.64 Ghana cedis. Now, from 2018 to date, Cow Bank has tested a price level of 64 pesos, failing to go beyond, and this is indicating a clear level of support. So, with the current price trading at 65 pesos, from the price trend history, it is clear that Cow Bank stock, it is difficult to break the 64 pesos low. So basically, that is that with the share price trend history. Major business efficiency indicators like profit margin, earning per share, return on equity, return on assets have all been at its best. Share price is significantly undervalued, trading 52% below its fair value.
Okay, you are Ebenezer, right? Okay, Ebenezer, you're team Odoom. Thank you for your presentation. I think I like your designs, which is very good. I have some few questions, and I'll be very straightforward. With the introduction of the debt exchange program, we realized that most of the banks are heavily exposed with government securities. We also realized from the presentation that interest income has not been good for Cow Bank, and then return on assets has also been good. Don't you think, you are recommending a buy for Cow Bank, don't you think that with the exposure of Cow Bank to government securities, especially government bonds, Cow Bank is also one of the bond specialists, they are also exposed. Don't you think it's going to affect their cash flows for the foreseeable future, looking at the program that we are being forced to enter?
Thank you very much. We start with the net interest income, which is broken back to the ordinary. Cow Bank is actually managing their cost operation cost. So in 2021, for instance, we saw cost to income of 40.7%, which is below the industry average. So yes, interest income is not good, but they are managing costs. So, and then also with the debt restructuring, that is more or less like systematic. Everybody is going to do it. But with the case of Cow Bank, it doesn't. It is among the banks that invest the lowest percentage of their deposit into government security. So yes, Cow Bank is also exposed, but then compared to that of its competitors, Cow Bank is in a good position.
I saw your earnings per share among peers. Cow Bank is about 0.32 pesos among your peers. As an investor, I'm looking for value for money. So why should I buy Cow Bank shares if earnings per share
Alright, thank you very much. So, if you try to compare it with its peers by the price, for instance, you can say Stand Chart is paying you $2 earning per share, or it's earning $2 on each share. What is the price of Stand Chart? $20. Cowbank is currently selling at 65 pesos, and it is able to give you 33 pesos on each 65 pesos share. But so if you do relative comparison, you realize that Cowbank is giving you 33 pesos, but how much are you paying to get 33 pesos? Just 65 pesos. But for Stand Chart, you pay a whooping 20 Ghana cedis to get just 2 cedis. So if you do the relative comparison, you see that yes, Cowbank is giving you more. And in terms of value for money, Cowbank is in a very good position.
So looking at return on equity, look at the figures over the years, it keeps coming down, and it's still suggesting a buy for an investor going forward.
Right, so the good thing about Cowbank stock at the moment is that return on equity, yes, we've seen that yes, from 2018 it was at 19.70, 2019 we saw 17.80, 2020 we saw it going up 18.90, and then 2021 started 17.30. Now all these figures are above the industry average. So yes, Cowbank is in a good position, although it's been up and down. You see that the drop has not been that massive. It is just very marginal, very slow. So yes, from 19.70 to 17.80, which is about 2% decrease. And then we saw it bouncing back to 18.90, and now it dropped again to 17.30. So yes, it has been up and down, but trust me, all these figures are above the industry average. We have some of these peers producing 12% and 10% return on equity.
We are making a projection in the company, so I'm buying Cowbank today for the future. So I'm also going to see projection in terms of, right now I know where it is, I know the value of everything. I'm supposed to buy it 4, 5, 6 years or maybe into the future. So within an estimation to the future, for the dividend valuation model you use, how many years did you capture it? 3 years. Okay, so if I'm buying into the future, so you are projecting that price ahead 3 years. So what if the investor is holding it for 5, 10 years?
So we have to use 3 years because of the use of this storage.
Thank you.
Yes, Ebenezer, I'm still on the net exchange program, which is very important for you. You realize that the exposure or the program that we are being asked to join, 2023, all investors, including banks who are heavily invested in government bonds, will not earn coupons in 2023. Be aware. So if the expected cash flows of these banks, or especially Cowbank, will not be realized in 2023, and will not be partly realized in 2023, wouldn't that affect your profitability to paying or to making a decision to pay dividends? I realized your presentation is, your pitch is making a buy decision based on your dividend yield.
Exactly. So yes, our buy decision is based on dividend and the fact that the price is undervalued. Now, with respect to their earnings from securities that they invest in, Cowbank is currently improving on their incomes from probably the fee business. Okay, so Cowbank is actually doing well in the fee business. So they are earning much more from giving loans and then the fees. So if you check, they actually didn't show that here, but if you check it over time, you will see that yes, their income from fees and charges as well as commission and also the interest from loans is increasing over time. So Cowbank has taken steps to ensure that they cover up for investors. And this, I must say that it is just Cowbank and a few others who are able to do that. The others are nowhere. So that is why we are telling investors that go for Cowbank over the other stocks.